Kumar Jain joins us, represents clsa. Let's take a conversation forward, understand what his view of the world is, which way the house of clsa is leading. Good morning, nice to have you back.
Good morning, Nikuj.
What are you advising your clients? How should they participate in this market or not participate in this market or stay in this market? Because this is a market where we can endlessly argue that valuations are expensive, but that logic is not making any sense.
Sure. So I think it depends on the horizon of investors. I would say anybody who's a slightly longer term investor, the 3 to 5 year kind of investors, I think every dip is a buy for India. I still believe that India's story has not been very well recognized globally. Imagine how India's weight in all the popular EM indices has been going up, but FII ownership of the Indian market keeps going down. There's a simple reason for that. That is that of the total pool of money, that FII money that comes into India, well over 90% is not benchmarked to India. So the selling in India is not to do with what is happening in India, but elsewhere. And on a relative basis, on most counts, the Indian market looks pretty strong. So I mean, for someone who's looking at a 3 to 5 year period, I think there needs to be much more money which is dedicated to India. India has its own unique, strong fundamentals. So that's for the ones who are looking at a slightly longer term period. That part of the recommendation pretty much stays. Yes, of course, one can keep talking about near term, and that's something which keeps changing depending on a few other things, because you need to look at things like sentiment, things like near term, how near term discussions move. So that's where one could have a little bit of differences, but I mean, in terms of the longer term outlook, that remains pretty clear.
Let's understand the near term. There are two scenarios staring at us: the decline in commodity prices, what that means, or the decline or drop in dollar index and the fact that interest rates will come down, what it means for liquidity in the world. What is a better trade right now? Bet on the revival of commodities or bet on companies which would benefit because of decline in commodities?
So I think I'm glad that you brought that up, because I think that's what is going to be the relevant discussion in the remaining part of this calendar or this fiscal, I would say. Just to kind of give a sense, the first half of this calendar year, that is actually from December of last year, we've been the discussion over here has been dominated by very India-specific events like budget, like the elections and all of that. That's now behind us. Firstly, the fact that we are having this discussion tells us that we are possibly much more linked to global happenings than what we were in the first half of the calendar year. So that's the first part that one needs to appreciate. Why that is relevant is in the first half, there was a whole different set of stocks which were kind of going up, which we started calling it Modi stocks, are a very India-specific kind of stocks, the stocks which are more India-linked. I think that they've had their rally. They might need to take a breather, and we need to focus elsewhere. The 2 points that you brought up, first is falling interest rates. The second is falling commodity prices. I think both of them together can only stay if the interest rate fall is on the fear of a significant slowdown in the global economy. If it is not because of that, I think the falling commodity prices bit will also stop. So I believe the market is still at large, still a bit confused whether we can possibly celebrate a perfect soft landing. I think the equity market has taken that side completely. The commodities market is still not so sure about it and much more nervous, saying that maybe the worsening job data and maybe some of the worsening data that is coming out, the consumer spend data, is telling us that the economy globally and more in the US is not in the best of health. I think that confusion needs to settle down, possibly in the next few weeks or so. That should settle down. Today's data release of the jobs data release in the US could be important. If there is a more consensus opinion that soft landing looks very likely, then my belief is that actually the commodity, or if you look at all the large global financial markets, the commodity markets are the most nervous. So they are the ones which could have a pretty strong rally to celebrate a that growth is not slowing down as much as feared, and we are having a reasonably good soft landing. So, firstly, I do not think that those two things can coincide. If those two things are coinciding, then we have bigger worries to think about, because from a perception perspective, India is seen as a growth market, and if those two things are coinciding, then people are doubting growth globally. Then typically, it will not be good for growth markets in terms of multiples. So I am still tilted towards the camp that there will be a period towards the remaining part of this calendar year in the last quarter when people will start celebrating a success around the soft landing. Whether it's truly a soft landing or not, we will only come to know with the benefit of hindsight much later next year. But at least the discussion will shift towards that. So I think, in fact, the trade for the next quarter or so, the next 3, 4, 5 months, is going to be interest rates being cut. And I did hear you talking about it just a while before I joined. And at the same point of time, I think commodity prices will need to start going higher. I think that's the part of the trade that the equity markets are not in sync to. I don't think the commodity markets are in sync to. That's where some bit of surprise could come in from.
So, Vikash, all probables indicate or hint towards a 25 bips rate cut from the Fed this month alone. Does that qualify for soft landing? Because I'm a little confused now.
So, it's not just the 25 bips. In fact, if you were to look at after yesterday's JOLTS data, now there's an expectation of 4 rate cuts. The base case is 4 rate cuts by the US Fed in the remaining 3 meetings this calendar year. So they meet in September, I think, and in November and December. So there are three Fed meetings left, and the discussion is that it'll be 4 rate cuts. So there'll be at least 150 bips rate cut. May not be in September, but later. But that's what the discussion is. Now, for us closer home, RBI is yet to change its narrative. So that's the thing to watch out for. A lot of people who are watching the RBI are still not confident that we will start our rate cuts that soon. I think that is going to be a little bit of a period of confusion where we're still not sure if rate cuts in India are starting, but Fed rate cuts become more and more base case and pretty much likely if there are 4 rate cuts in the next 3 meetings in the next 3.5 months or so. Then that is something which could be of a lot of interest, because I think somewhere between that period could be very interesting opportunity to get into some of the not so expensive rate sensitives if we can find some of those. So that's where the opportunity would lies closer home. And I still believe the commodity part that we discussed, wherever we can kind of choose some of those names, that becomes interesting.
Let's look at it from an investor point of view, Vikash, and I'm purely talking India specific, because I recall when we spoke with you earlier June, you were talking about as to how there could be a sectoral churn and how the focus could move out of, power and capex themes. It's very rightly played out. You are seeing the allocations broaden outside the PSU pack. But are you getting the sense that maybe the peak of PSUs is what we've seen already?
Yeah, I think that's something that we, drawing parallel from earlier election cycles, we had kind of expected that even after this election cycle, where the results were a little underwhelming in terms of the election results, that is exactly what would play out. And I think that is on an absolute peak might have taken a little bit longer for PSU pack, because there are certain stocks which have still kept the interest over there. But on a relative performance basis, like you said, it was pretty interesting. Although I've not checked the data more recently, but post-elections, it's all the sectors which are not seen very closely as Modi sectors are the ones which are leading the pack. Like IT is doing very well, and some of those other sectors which are doing very well. Some of the defensives are doing very well. I think that period could sustain for a bit longer. There's always a laggard trade which plays out towards the end of the calendar year. That's something which is where we have, empirical evidence that might also kind of come in. But I would say PSUs for now, for the next few weeks and months, I think should not be our favorite area. We in our India portfolio, we had a lot of PSUs when we started the year. Yes, we did cut weight on them maybe a few months ahead of what we should, but we are not looking to add much more in hurry at this point of time.
Right, Vikash, just to, keep it with individual sectors, I want to discuss what's happening within pharma as well, because it's been on a healthy streak, to say literally. The last 3 months have been pretty strong for the entire basket, whether you attribute it to the fact that it's a defensive basket or there have been a significant increase that we've seen in their market share in the US generics market. Do you believe that there is further steam or further legroom for growth within pharma?
So I think, the market itself is pretty expensive, but I mean, I think pharma, for some of these more bigger cap pharma names, which are still less of a domestic story, clearly the valuations are looking not so comfortable to us. So that's why we reduced our weight on pharma a few months back. So yes, there is, I should have kind of waited a bit longer, but clearly valuations are not something which are giving us a lot of comfort. See, I think you can divide the market into more India specific trades at times and the more global trades. Global trades and the global companies typically have global comps which are more relevant. Like, a commodity company in India cannot be seen to be trading very differently than a commodity companies elsewhere. And similarly, I think when you are linked to the selling most part of your business coming from outside, it's tough to extend multiples significantly higher. So, I'm not really pushing my luck on that one too much.
Because is there a chance that flows could turn decisively from the global front? Because the setting on the table is such that Fed has pivoted, dollar index is down, China, no one cares. US economy, in a sense, at least the growth part, which is the Magnificent Seven or the famous Five, whatever you want to call them, they are expensive. Do you think decisively flows could come back into India?
I think decisively, if the soft landing narrative played out, the third bit which will again come into flavor is perhaps more confidence on EMs. Okay. Now, if more, like I was explaining right at the start, 90% of the money, foreign money that comes into India is non-India dedicated. If there is more confidence into EMs, these funds are likely to see inflows. One of the reasons why FIIs own much less of India as a percentage of share of the market is because most of this money is in EM, and EM as a perception was not seeing with whatever was happening in China. People who were investing in EM funds were not feeling very comfortable. That cycle reverses. The question to ask then will be, when money flows into EMC, I think definitely that will mean flows coming into India. And typically the best months in terms of performance has been when we've seen big FII buying, whereas there's of course this steady domestic buying which keeps happening. So whenever FIIs also turn buyers in a big way, are the months where we have seen big performance. So from that perspective, that is the other part of kind of potential possibility if the whole soft landing narrative gains more confidence in currency. I think then people will start looking at investing in EMs because EMs as a basket is pretty attractively valued. I mean, most markets other than India and maybe Taiwan to some extent most of these markets are pretty attractively priced. So that should mean more money coming into the EM basket, and that should also mean some of it flowing into India as well.
Interesting businesses which off late you've liked, for example, let's say 2 years ago, the consumer tech fintech business got listed and it got created. Now the battery guys are going public, let's say name of Ola. Soon you would see new interesting companies from the SaaS space which are going public. One of them has only gone public. Anything interesting which comes as a new theme, could be niche or small today, but has potential to become big?
So we've recently come out with a detailed report just a few days back on in a way consumer tech, quick commerce. Perhaps from being more like food delivery operators, some of these are shifting into taking a much bigger pie of the overall retail market. And if you think about it, there is clearly value and convenience that they offer. they may not be the best on value. The best on value would make you kind of go and queue up and buy in supermarkets, which is something which is not the most best on convenience. But if you get to see the best mix of convenience and value, then they fit pretty much over there. So some of these names in quick commerce, and maybe there could be more which would come, which could be added over the next few months and years into the market. I think that is one theme that we like a lot. So that's something which we are quite interested in.
Question, which is that technically, if somebody has to sell or go short on, when I say short on, I'm talking about somewhere where you think asset prices or stock prices are really bloated and they've reached what could be called as real Humpty Dumpty level. So a brokerage would say underperform or a sell. So would you identify pockets where valuations have become Humpty Dumpty?
So, Nikunj, I think this is the bit which has become very tricky about India. The thing is, we are in a situation where so we have this, our proprietary India Bull Bear Index, and that is, as we speak right now, at an extreme bullish level, getting close to 90% bullish, typically around the levels where we start kind of fearing that there could be a corrective pullback, getting to that level. Now, when this is something which happens, what we have seen is this happening without any big, massive worry or a red flag can only at times mean shallow corrections or periods of low return. So, even when we've been using it on a live basis, this is a new kind of a setup globally that we are in. Like, India doesn't really seem to have its own red flags, but there could be reasons why when sentiment goes to one extreme, you see a period of extended, of low return for some time, or maybe even a pullback. Like last time when it happened, we've had a quick 4% pullback, in early August. So I think that's something which we could again see, and then maybe a gradual move. We are in a period of low return for sure. In such periods, I think there is always a positive rub-off in an excited market like India. Now, when that positive rub-off goes into global sectors and you start thinking of treating global sectors with a domestic lens or an India lens, that's a very blatant mistake not to make. Like, for example, commodity producers elsewhere are also commodity producers. Here, they also depend on global commodity prices. So you cannot suddenly start seeing them differently just because they're listed in India. So some of those things perhaps is where a lot of excitement at times kind of rubs through. There is, of course, at times areas where there is multiples have gone significantly higher. When you talk of things like going to 50, 60x multiples, this is unbelievable amount, unbelievable quantum of growth on a pretty significant sustainable basis that those stocks are making in. Those things become, very difficult to kind of push, and it's not easy to shorten this market, but those are places where you should not be pushing your luck much more. I think that's the minimal that I can say.
Okay, good to have you. Thanks so much for joining in, Vikash, and sharing with us your insights about what the decisions could be when it comes to the monetary policy action, the outlook on individual sectors, and where emerging markets are poised. All right.
If you like this video, then like, share, and subscribe to ET Now.